You know, us stackers are a very fascinating collection of people with unique personalities, different outlooks on the world, and interesting personality traits. I mean, if we had a battle or a rallying cry, it would probably be,
"If you don't hold it, you don't own it."
I mean, with all the crises we seem to be facing, particularly the financial crises, holding your metals in hands is perhaps one of the soundest principles to embrace. A few videos back, we discussed Exeter's pyramid and how ultimately all the money printing and crazy monetary derivatives will lead to a collapse where it all comes back to real money in the form of gold. In a follow-up video, Financial Lock and Key, I introduced a concept I created called the Stacker's Wealth Pyramid, and while our personal finances and physical metals serve as the foundation, the most important variable is always you. I also warned that like most assets, there's a real and a derivative side to the Stacker's Wealth Pyramid. But as stackers, we only deal with the real side of the pyramid. Equally important, I pointed out that as you move up the pyramid, the amount of risk, knowledge, and skill required all increase, including leverage. This leads me directly into what I want to discuss today, leverage. Leverage can mean multiple things depending on whether it's used as a noun or a verb and the context of how it's used. Most of us first learn about leverage during our childhood while playing on the seesaw or teeter-totter, and we quickly find out that it doesn't work as well if the other person is significantly larger than you. In a nutshell, leverage is about our ability to get more done with less effort. The rich and the wealthy understand leverage in a way that most of us don't, as some of their favorite forms of leverage are OPM, other people's money, OPT, other people's time. You see, this is how they finance investment real estate, their businesses. We also have to remember that leverage is like a blade that can cut both ways. And so our stacker's battle cry does create some challenges for us, especially since Michael Maloney recently clarified what he really said, quote, "If you can't hold it, you don't own it." Regardless, the stacking community lives by this mantra, and I believe it has led many stackers to overlook one of our best investment opportunities, which are mining stocks. Limiting our stacking to what we physically hold means we can't harness and take advantage of financial leverage, a very powerful tool, as we can buy mined physical gold for mere dollars compared to the spot price. More on that later. I'm sure by now you've noticed that this is a paid sponsorship video for Gold Mining Inc. And I need to let you know that Stackers University is being compensated for this video. The full disclaimer and disclosures are provided in the description for your review, and I will make the materials available in the description. I also hope you know that on this channel, we don't do sponsorships or partnerships I don't believe in. In the interest of full disclosure, I'm also very proud to tell you that I personally own stock in Gold Mining Inc. Additionally, I want you to stay with me because while Gold Mining Inc. is the focus of this video, I'm also here to educate. So we will also learn how to evaluate junior mining companies because it is a critical skill set if you choose to participate in this asset class. Before we even begin to think about mining stocks, we need to be clear that investing in mining stocks is risky business, and our ability to evaluate the opportunities is a critical skill set. Regardless of all the things that you hear, these investments are not slam dunks, but if they can catch the alley-oop and finish, it brings the house down. As I've shared before, successful investors don't avoid risk, they manage it, and they make sure that risk comes with the appropriate level of reward. In an attempt to manage the risk associated with junior miners, let me share some questions I ask myself before I take any action. The first question I ask is, have I done my research? How do I want to invest? Do I want to do royalties, ETFs, majors, juniors? What's my exit strategy? Because that informs my overall strategy. What's my time frame, my risk tolerance? How much will I invest? And how much am I willing to lose potentially? I've shared this in the previous mining video I did, so I won't go into detail here, but I think it's important to make sure you understand the life cycle of a mine. This chart and cycle really helps you understand the risk-reward association with mining companies. But here's what I really love about investing in mining companies. One, it's a leverage play with the gold price. Now, mind you, it can cut both ways. Two, buying gold in the ground at a discount compared to what you get on the open market. In an inflationary environment, the expenses from mining can be offset with rising gold prices. And as production and price increases, miners bring ounces to the market with increased profit margins. So I think they're a fantastic way to invest. Let me give you a kind of an example or a scenario. Let's say it costs a miner $1,000 to produce an ounce of gold, and gold is selling at $1,100 an ounce. Well, the gold miner is going to make about $100 an ounce in profit for each ounce they mine. If the price of gold jumps to $1,500 an ounce and the miner's expenses stay the same, then suddenly they're making $500 an ounce in profit from each ounce that they sell. Their profits jump 400% even though the price of gold only rose 36%. That's the power of leverage. That's what we're trying to harness. If we stick to our mantra about holding physical only, then we're limited by what we can personally afford. Not to mention, your money is locked up in the metal. With a mining stock, I can experience tremendous growth and price appreciation for a fraction of what I have to spend on physical. Then I can just simply sell the stock and trade it in for more physical. Now, I'm going to specifically talk about why I love Gold Mining Inc. and why I originally bought their stock. But also, I want you to pay attention to the critical questions and considerations that should be accounted for prior to investing in most companies, especially junior mining companies. What I'm offering is not financial advice, just some considerations and how I feel about Gold Mining Inc. in particular. Gold Mining Inc., ticker symbol GLDG on the New York Stock Exchange, first got my attention after I heard about all the assets they had acquired over the years. Off the bat, I love that they were greedy when everyone else was fearful. For almost 15 years, they had gone around the world buying up gold resources for 10 cents on the dollar when no one wanted them. As a result, they've acquired over 32 billion ounces of gold equivalent resources for a tenth of what most companies pay. So let's just get into it. And as we get into these questions, I also want you to see how they stack up. On the screen, you can see a chart, and let's go through it one by one. All right, folks, if you're learning anything, if you're getting any value from this video, if you love stacking, if you love Stackers University, or you appreciate the effort that I put into these videos, could you please do me a favor and hit that like button for me and let the algorithm know that you enjoyed this content. Also, don't forget, it's still my birthday month, birthday week celebration, so there's another giveaway. I'm keeping it really simple. Make a comment or simply put an A+ in the comment section. You'll automatically be entered to win. One of the first questions I have are, what are the financials, the resources, what's the market cap? Well, in the case of Gold Mining Inc., $132 million, and they have 32 million gold equivalent ounces. They also have a 15% stake in Gold Royalty Company, which I love, and I actually own that one as well. And so that means when it's all said and done, they have about 83 million in assets to go with that 32 million ounces of gold equivalent, which means you're buying gold at $2.59 per ounce. And the share price is only at 87 cents. Now, I'm going to be clear with you, and we've heard this before because I've quoted Rick Rule about this. Price is just a floating extraction. It doesn't tell you the value. And then I look at how their financials stack up and compare it to the industry average where people are paying roughly $40 an ounce, which is actually 1,544% higher than what they are being evaluated now. And so if you took those 32 million ounces and multiplied it by $40 an ounce, the company will be worth 1.2 billion. And that means that there's a potential upside of 900%. Unbelievable again. And then you kind of look at where are their deposits. And this is important because if they're in bad locations, that could create problems. And so I love that they are in very favorable territories like the US, Canada, Brazil, Peru, Colombia, and they have all 14 of their projects spread out through those various locations. And then there's management team. I must admit, I didn't know who Amir Nani was until 2 years ago when I was researching uranium companies and then ultimately invested in UEC and UROY. Amir Nani was behind those uranium companies, and now he's setting it up to do the same thing with GLDG, Gold Mining Inc. And how well have UEC and UROY performed? Well, take a look at the screen and look at those numbers. And let me tell you, I wish I had made my purchases before 2020. Both companies are up more than 400%. And this is important to me because here's one thing I do know. Success begets more success. And its companies absolutely outperform, especially in the bull markets. And many analysts have waxed poetic about Amir's managerial skills and his corporate expertise. And that's why they have GLDG is poised to be the best performing gold stock of the coming bull market. Another variable for me is other big players. Now, this one's a little interesting for me because you and I don't have access to all the same information the big fish and smart money have when it comes to investments. However, I do know I'm doing pretty well if I'm swimming in the same waters as them. And as you can see, there's a long list of people and entities involved. But when I see names like Rick Rule, y'all already know how I feel about Rick Rule, Doug Casey and BlackRock have all been involved early in this company, that absolutely makes me feel a lot better. The other thing that is always interesting to me is looking at past performance. And here you can see on the slide how well this stock has performed. And we've seen a 5x, 7x, 10x, and even 30x returns. Another interesting thing is to look at what does it sell for? And in 2022, things are going for about $50 an ounce, which means they can sell for over $1 billion. And then the stock price, again, we know stock price doesn't tell us a lot, but it does tell us a lot when we know the value. And because of the value of the company, a stock price at 87 cents is something that I want to be a part of. And it has been beaten down. And so I just believe there's tremendous upside here when you look at how many resources they have in terms of ounces and money and the people involved. It's kind of like buying next year's winter coat in the summer when prices have been slashed. And then there's the analyst prediction or price targets. And you know, predictions are just predictions, but I can feel really good that one, I'm buying something of great value at a time when the price has been beaten down tremendously. And then analysts are predicting the price to be at $6.25, which then would represent a 681% upside over the next 12 months. So this is an exciting opportunity for me. As you can tell, I'm very much a believer in Gold Mining Inc. And that's independent of this being a sponsored video. That's why I disclosed to you at the beginning that I actually own the stock, and I owned the stock before I even did this video. Obviously, you have to be your own investor and you have to do your own research because, as always, you have to own your own results. And that's why I shared that chart with you with the list of questions and things to consider that I go through to help me determine whether or not something is worth me putting my money into it. Regardless of if you invest in the majors or the junior miners, mining companies offer some tremendous upside opportunities that is not solely based on your ability to purchase full ounces at $1,700 an ounce. It's that leverage play again. And that is how we can make a tremendous amount of money in a short period of time if we can find ways to leverage our efforts where we can turn one of our dollars into 10, into 30. While physical metals within our reach is absolutely the cornerstone of who we are as stackers, there's also a tremendous value that is created with some exposure to safe leverage plays and leverage growth opportunities. This is exactly what the smart money does, the rich and the wealthy do, as we are all limited by the amount of investable dollars we have. And so the dollars that we do put into play, I do believe either need to go into those physical kind of holdings or into these physical miners that offer these leveraged opportunities for growth for us. The fact that Gold Mining Inc. was able to acquire over $80 billion worth of assets when they were unloved, and now I get to buy Gold Mining Inc. shares when they are unloved, just makes a ton of sense. In the comment section, please share if you own any mining stocks. If you do, are they majors or juniors? How do you evaluate whether a company is worth investing in? And is my list of questions and considerations helpful? What did I miss? Or simply put an A+ in the comments to let me know that you made it to the end of the video. Don't forget, we have nothing but A+ students at Stackers University because we always stack smarter and never stop learning.